In terms of the economy, this is one of the most uncertain times. There's so many moving parts, each of which is going to have major ramifications on your asset values, on what's going to happen next, how you should position yourself. We're going to talk about in this video what you should do right now to get the best benefit going forward. This channel is about helping you navigate your way through this economic train wreck that we're all experiencing right now. You're going to want to watch this whole video. It's a good one.
For people who are economically well off, inflation isn't good, it's bad.
Always remember that nothing we say here should be intended as personalized trading advice for you. You need to make your own decisions. You do your own due diligence. We are going to give you our 100% honest opinion, what we believe is going to happen, and we happen to be very educated, very good at this stuff. This video was inspired by an email we got from Robin H. Hi there, I've been following Peter for years, and well, I'm sorry to say I haven't exactly taken action on his calls. So here I find myself in a serious losing position and not sure what to do. And sadly, there's a lot of people with that same sentiment. I've heard a few people that are saying, man, I should have listened to Peter. And I don't always get it right, you know that, but I've said a lot of things that are totally playing out right now as I expected and as I anticipated, in the face of everyone else talking about the other way or the other thing. When the real estate market was going gangbusters and there's fear of missing out and people are overbidding by so much, at that point, I was telling you that this is not going to last at all and that real estate is going to come down. And I'll tell you that real estate will continue to come down as we go into 2023. And it's going to be a very difficult year, in my opinion, for not only real estate, but all sorts of investments, including bonds and stocks and even the unemployment rate, and in terms of the number of bankruptcies and defaults that we're going to be seeing. Let's think back to what did I say? I said it was all going to come down together. And then we've seen even bonds. People thought bonds were so safe, and they took a big loss on that. Real estate's coming down as I expected. Cryptocurrencies came down dramatically in the face of everybody scrambling over each other to try and get it before it ran away and became $1 million of Bitcoin. Everybody was saying that, and it turned around and came back down. And stocks came down at the same time as well. Not the exact same time, but in general. And it all came down together. There's too much easy money with low inflation rates. You could borrow and borrow and borrow money, buy back your own shares. This is what companies were doing. And rather than invest back into the company, technologies and workers for the business to run better, they would just buy back their own shares and drive up the price so that they can cash out whenever they retire. It's better for them in the shorter term. And the entire economy got delusional. I told you that it was delusional, and you saw it now coming down, getting back to reality. This is the process we're going to have a big deleveraging. And I'm telling you, too, in the face of everyone saying that inflation was going to go up so much higher. I'm saying it eventually is going to be hyperinflation. No question. The American dollar will eventually be basically expiring like every fiat currency always does. Every fiat currency is either crashed and hit zero, or it hasn't done that yet, but it's on the way to doing that. Because you can't trust a government not to take the easy way out and just create new money and keep debasing the currency. In the race to the bottom, that was the thing that they were doing on purpose. They're trying to get their currency to be the lowest, because if your currency is worth less, it makes your exports more attractive and it helps repair your export imbalance. That's just one of the advantages of having a less valuable currency. For everyone who's joined the Peter Leeds Army, I sent you a personal email directly from me to you to talk to you and introduce myself to you, make sure that we're on the same page and they have a direct communication with me. So if you didn't receive that, check your spam folder and definitely reach out to Tammy to make sure that the email that I sent to you directly got to you directly. I'll tell you though what to do now. If you haven't listened to me yet, maybe you'll listen to me now, that I think I've proven myself pretty well, especially in the face of being one of the only people to say it this way, and it's playing it exactly like I said, which first of all should scare you to high heaven, because if it keeps playing out like this, it's going right to where I told you it was going, which is a depression more than a recession. Are we going to have a recession? We're already in a recession, but we're going to have an actual... See, this is what I always say is that, you know what? Just wait, because this recession that they're arguing it's not a recession, it is a recession. If you just wait, it'll eventually get so bad and so clearly obvious that even the powers that be won't be able to argue that it's not a recession. It'll be pretty clear. You will not have to worry about the wording. But this is all why it's so important to start doing the right things now if you haven't done it yet. And I'll tell you only the things that I told my family members, my daughter, my father, my friends, the things I'm doing for myself. That's all I'm telling you. Besides buying high quality gold mining or silver mining companies, you also want to be cautious, get out of most cryptocurrencies. But there will be a capitulation point where I'm going to tell you to get into cryptocurrencies aggressively. I'll tell you when that's going to be on this channel. It's not yet. Prices will come down a lot, and then you get into Bitcoin. That's going to be there forever. The other ones have other concerns, and they may not be around forever, so you might be taking a risk in that sense. As well, you know that real estate is going to be coming down. House prices will be coming down. So you decide what you want to do about that. And at the same time, you also know that there will be a recession. And I think it's going to be a significant recession. Some people say it won't be, but that's up to you to decide. But there's lots of videos on the Peter Leeds YouTube channel talking about what to do in a recession, what kind of moves to make, what to do before the recession. The Ultimate Guide to the Recession Prep talks about consumer spending, housing, employment, the types of assets you should gravitate towards. Please give that video a watch. It's going to tell you a lot more to add color to everything I'm talking about in this video. I feel like I'm pretty far ahead of the game, and so I don't think that it needs to be updated. Basically, what I told you in the first place, you should have listened to then. You can see it now by going to the Peter Leeds YouTube channel and just doing a quick search on what recession videos we've got out there. I'll put a link to that video at the end of this video as well. But don't start looking to things if you're desperate, where you need to turn a few $100s into a few thousand by getting involved in some expensive program, or some guy online here doesn't know what he's talking about. You look at somebody and say, well, what are their credentials? Do they have published books? Do they have media appearances? But what I tell my family and what I'm doing myself, I'm getting involved in gold mining companies, silver mining companies, because there's a chance, and a really high likelihood of a chance, and you'll understand if you see some of my previous videos about China picking out on gold and making a alternative gold-backed reserve currency with Russia and Iran. You see that video, you'll see that there's such demand on precious metals, there's such a debasement of the currency at the same time, that there's a huge likelihood that you're looking at getting 10 times your money, more than that, possibly 30 times your money if you get involved in the right kind of silver mining company or gold mining company. And it's not taking a chance like playing the lottery, and it's not taking a chance like joining one of these day trading programs online that is trying to trick you into buying their thing. Just take a step back, take a breath, and invest for the long term. Investing is boring if you're doing it right, and it takes a long time if you're doing it right, and if it pays off, then you'll realize that it didn't take as long as you were worried about. There's a high likelihood, in my opinion, that precious metals are going to soar higher, and when they do, the profit margins of the companies that mine for those metals will soar by even more. There's a point where if a company is mining for gold, for example, is making $1 per ounce of gold that they mine, extract, and sell, and then the price of gold goes up by $10, now they're suddenly making $11 per ounce. It went up by a factor of 11 from a $10 rise in the price of gold. And that's your elbow. That's the moment where you take just an investment in a company that you can understand. You can see how much debt they have. You can see how much it costs for them to produce the precious metals that they're producing. You can see how much gold they have in the ground, proven and probable reserves. And you can know that if the price of that precious metal increases by even 15%, that you're going to have much more of a gain in the mining company itself, the shares of that company. And I say 10 times your money on the low end. And it's not a guarantee. I'm not saying that this will pay off like that, but I believe wholeheartedly that it will. And you guys know me, especially if you followed me for a long time, you've been involved in the newsletter. You know that I'm not trying to shine you on. I'm telling you my absolute honest opinion. I'm not right 100% of the time, but I don't lie to you. I'm not trying to prove myself to you. I did that when I was a kid, basically, when I was a lot younger. I'm just telling you what I see, and people are now, a lot of people are mentioning, man, I should have listened. If you had listened, you would have got out of the way of this whole derailing of the real estate market that we're going to really be seeing in 2023. You'd know that in the recession, your job's not as secure as you think that it is right now. And as I told you, that inflation would come down first before it goes much higher. it is starting to come down, and it's being proven out. And I love it that people still argue with me, and I'm just enjoying it because I can just say, well, it will be clearly obvious who's right or wrong. Just wait. So what to do now is to make sure, in my opinion, that you're out of a lot of the speculative stuff. Don't listen to what they're telling you on the media. There's a hidden motivation there. That's why you say, well, I saw it on CNBC, so it must be professional, it must be good advice. But they're also the same channel telling you to buy this Bitcoin and this cryptocurrency. A lot of the altcoins are going to go to zero. A lot of people were told to buy the altcoins on CNBC. And then you're going to argue with me now that, well, it's on the news, so it must be legit. You got to listen to it. No, you got to listen to yourself. You got to learn for yourself. You got to reinforce what you know. Of course, a good way to do that is to listen to me. You learn on videos like this of people that are actually legitimate, not just somebody with a camera on their computer. And definitely don't invest, and be honest with yourself, don't invest from a place of desperation or greed. It doesn't work that way. You can't invest and be desperate or greedy. That's a certain recipe for losing even more money, making it even worse. The unfair advantage is that you can look at a company and know how much money they owe compared to how much they own, and have a good idea if they're even solvent. You can see how much they're making in revenues. Is that increasing? And what is the cost to generate that revenue? Are those revenues increasing? Are those costs coming down? You can see all of this and then know of a group of companies you want to invest in, which one is performing the best. That's what the Peter Leeds Academy is all about. But before I forget, I should say happy Thanksgiving, and it's a window of time here between Thanksgiving and now Christmas holidays that it's going to be really slow right now. So should you just take it easy and hang out with the family and relax? Yeah, of course, yes, you should, but also don't let your guard down in terms of investments. This is a great time to invest when nobody else is paying attention. And as I told you in the last video, that it's tax loss selling season. So a lot of people who have a losing investment are going to be selling the shares indiscriminately just to capitalize on or actualize the loss that they took, and that offsets their income taxes from other investments. Other capital gains that they made get offset, and then they pay less tax. It's a common thing every year. It's happening right now. If you're looking at a thinly traded stock that's gone down a lot in price and you want to get involved with it, this is the best time to do it, between now and the end of the year. Tax loss selling, it's a hard stop. December 31st, boom, it doesn't matter. Then you're on to the next year. So then there's no more tax loss selling. And there's people out there saying that there's going to be new highs in the stock market this year. So this month, I guess they mean. That is another one where it's so clearly provable. You'll see whether or not they're right. And I'll give you the spoiler alert that they're wrong, but it's so important to get your headspace right. You got to get your frame of mind right if you're going to be doing this. If you're really wanting to take your situation and make the right choices to land in a better situation, especially a lot of people now are starting to see what's happening with their retirement funds. And that's one of the videos we got coming up, which is why you definitely want to be subscribed to this channel. We're going to talk all about this pension crisis I've been warning you about, telling you about for ages now. And who is it going to affect? How is it going to affect you? What can you do about it? And when does it all happen? I'll tell you all of this stuff in an upcoming video. And you may want to get involved with stocks and companies that pay a good dividend, a reliable dividend. A utility company is a lot more consistent, a lot less volatile, which makes it a better investment. Certain types of investments do well as the stock market continues to come down. I believe it will continue to come down, but we may have a little bit of a jump higher going into the end of the year. They call it Santa Claus rally. This is one of those things that's a self-fulfilling prophecy. They talk about it on the media, people believe it, they've seen it before, so they act on it, and that makes it happen even stronger than it otherwise would have. It's no different with the sell in May and go away kind of theory, where everybody thinks that everyone's doing it, so they all do it, and next thing you know, it happens. It's a self-fulfilling prophecy. But just always keep in mind, too, that investor sentiment is a contrarian indicator, so that if everyone thinks the stock market's going to do well, it's more likely that it's going to go the exact opposite way, because people act on their beliefs ahead of time. So I'm not in the studio right now. That's in Canada. That's where you see most of my videos from. I'm here at home at Jay's house in Detroit, and this is my new studio I've set up there, which means I can give you guys the information you need, whether I'm at home or if I'm at the studio. I'll be able to interact with you guys directly all the time, help keep you on the right side of this, because this is the time where things are all starting to come together. 2023 is going to be a very difficult year for the economy, and therefore a very difficult year for most people. There are still tremendous opportunities, even better opportunities in a time like this than a typical market. And that's what I'm helping you see. This channel is about helping you understand and make the right moves as we go through this economic train wreck together. And here's another email we got. This is from Rachel. I purchased AAVVF back in 2018 when it was one of Peter's stock picks. It has done quite well, and I'm certainly pleased. The company's offering a stock buyback for a premium. Current price is $8.70. Stock buyback will be around $11.20. I'm curious about Peter's opinion on what to do about this. Should I hold it? Should I sell it? I'll tell you what I always do. Anytime one of the companies I invested in has a hostile takeover or a friendly takeover, either way, as soon as it happens, you're going to get the jump in the price premium, because they typically will pay more than the going price so that they'll entice all the shareholders to agree to the takeover. I always, almost always, just sell into that at the new elevated price. Because a lot of times a takeover offer can fall apart and the shares come back down. Other times it'll just wind up closing out at that price. So it wouldn't matter if you sold it earlier or later. Sometimes they'll have to raise the bid, or if there's another company competing for the same company and they'll keep trying to outbid each other. I don't take the chance of incredibly low likelihood of that. I don't worry about it. I just sell and I look to another investment that I want to move those funds into. I take the win, basically.